Welcome everybody to another Monday Open stream. I hope everyone had a great weekend. Did you all have a great weekend, everybody? I hope so. Or were you just ready for this market to get opened? Because we're in the beginning of what I like to call earnings week kickoff. Obviously, it technically was kicked off by Morgan Stanley and JP, but you know, we've got some big ones coming in this week. So let's have a look here at some of the big session makers this week in terms of what stocks are going to matter. I think it's a good place for us to start today. Obviously, first place is going to be Bank of America and Goldman Sachs. Then we're going to move into things like Netflix and Tesla, which are probably going to be the big testers of the market this week. And then we move into some of the other big tech stocks, such as Snap and Twitter. Though Twitter's probably not going to have the best return. Let's see how much volatility is going to be in that one. As always, guys, for anyone that's joining us for the first time or watching this in replay, we will be going through the S&P 500, gold, metals in general, commodities, crypto, and everything to do with the stock market. We're in earnings. It's an exciting time in the markets, but also a bit scary because the market's rallying and many people are still faring very bearish. Whether they're correct or not, well, we'll find out. I have a feeling that the market may have some legs in it yet in terms of this rally. We've been discussing the bull trap for a little while. Can we get up higher? I would like to see it a little bit higher first. Does anyone have a level that they want the market to reach? Let me know in the comments right now. And let's see what everybody has to say about these levels. Everyone's saying they had a good weekend, pretty good, not too bad. And Retro Llama says, time to YOLO some earnings. Yeah, well, if you use options, I guess you could always do that if you wanted to. So I think the market probably revolves around these two this week. Netflix probably expected to lose subscribers due to obviously inflation and just the fact that people are cutting their Netflix. Has anyone here cut their Netflix, or have you added Netflix in the last quarter? Let us know in the chat. It's always good to see the commentary on that. If you know people are cutting, then let us know. And Tesla is probably the big one because I think it might do okay, but at the same time, what the hell is the expectation of the street anyway? We could look at their expectation. Do we even know how much they've priced in? That's the problem. You're not going to know. So this is an earnings like no other because, yeah, it's going to be a lot of guessing. And guessing is not really what I like to do so much. I mean, obviously we're using technical analysis, but we like to kind of add the stats in our favor. That's the big one. Sandola77 coming in with the $4 super sticker. Thank you very much, Sandola. Always appreciated, sir. I've been having quite a few coffees on you, so I do appreciate it. Downward trend here for US 500. We're hitting it in the futures market action. So this is that big trend line. You can see how it flows through all of the previous pickups. Now, this would be a big one, I think, which would change a lot of technical analysts and a lot of people's sentiment. Obviously got a resistance here, and where we are right now. This is where bears will try to come back in and short it. It hit it pre-market, so it hit it about half an hour ago or so. We got over a 3,900 plus, and then we're currently coming down. So as I always like to do, let's compare them together. What you should have on one side is the S&P 500, which we've got here. And then on the other side, you should have something like ES futures. We can use ES futures. That's fine. There we go. I know a lot of Americans do love the ES futures because that's the main futures you guys trade. Obviously, anyone else in the world, if you have a CFD provider, usually it'll be like SP 500, US 500, something like that. All right. This is where things get interesting. So we have a 38.63 close on the Friday session. We have a gap that's filling potentially under 3,800, so maybe like a 37.96. So we have two gaps that are left below. We have a resistance formed at the beginning of this session. Now, I could see this market actually going back down to where the close level was, potentially, like coming back into this level here, 38.63, and then trying to turn around. And I think this is a valid kind of concept. If you're looking for buys today, the gap filled to the short with the potential of a turnaround in this area around that 38.63 is probably what you're most interested in. Let's have a look at a 15-minute chart so we can understand the 38.60 zone. Notice everyone, notice over here, 38.63, what happens around this zone? Seems like there's a bit of chop consolidation. Probably some traders, probably some orders. So this is the type of area that you would want to focus in on the session. Obviously, you've got to practice discipline. That's what we always talk about. But that's a zone that I think is very interesting to buyers and also sellers to potentially take profits. And it could be one to watch through the session. If you missed and you're not currently holding, or you're looking at potentially getting into this type of rally and you're feeling bullish or anything like that, that's certainly an area we're looking at. Now, could it just sell off here and this be the end? It could. But if I was thinking and putting myself in the idea of, let's just all do this. Let's all just say, okay, what's the market thinking about right now? How would I extract the most amount of money if I still wanted to go bearish? And frankly, every single scenario I come up with, it's get a little bit higher. Do remember, guys, although we have two gaps here, we also have a gap that's left over here between 39.60 and 4,018. Or 4,020. So this also exists in this market right now. This one's filled, so we can get rid of that. So we've got unfilled down here. There's an unfilled. We've got an unfilled here, an unfilled here, an unfilled here, and there's another one at 4,300. So there's so many unfilled gaps in this market right now that are left, and they're all pretty big and pretty huge, I would say. So these are the ones that I think are most likely. Most likely we come down, try to find these areas. This is obviously statistical potential here. We go bullish. Ideally, we fill that kind of zone. And whether we get all the way back up to like a 4,200 or whether we kind of revert somewhere around here, I'm not too sure. I'm going to run a poll now. I'm going to find out what you guys think for the week ahead. So let's get everybody's opinion. Whether you're bullish or bearish, there's no right or wrong answer. I mean, obviously, there's cases to be made for both. So let's see what you guys think. Here we go. I'm going to run the poll. I did forget to put in the usual one that we do on the channel. So I will continue to do that. Now that we have such an amazing community that votes on this stuff, it's great to see your opinions here. Let's read the chat just quickly before we go any further. Great, $10. Thank you very much. That's good. Glad to hear you're doing well. Charles says, why is it always bull or bear? Where's our condor option? Yep, fair enough. And Moniette Crypto says, bull trap dumpage soon. Fair enough. Yep. And Ernie says, because I feel so bearish, I think the rally will continue. Yeah, well, vote bearish, Ernie. I don't want to see you voting bullish there. But yes, a lot of people still feeling fear. People still feeling fear. That's the one. Henry Person says, nobody really knows. That's true. What you're doing is, trading is actually about finding areas of statistical advantage. I said this to someone in one-on-one today. We're talking about it. Maybe I'll share my concept anyway. So my concept on trading is this. At certain times in the market, you've seen things play out before and you've seen how they play out before. If you know that is replication and you've seen it and you've had it play out before, then you can therefore statistically have a higher chance of being successful. That's what it's about. Replication. Finding concepts that you can continuously use and hopefully perform thousands and thousands of times. Now, does that mean that every single minute of the day you know where the market's going? No. That's what a beginner believes that you should know. But in reality, does anyone really know that? I don't know. Maybe the algorithm that's ripping people off in the back end. I do not generally. Sometimes you'll know, or at least you'll have a very good educated guess. But most of the time, you may be just sitting there going, I'm waiting and I'm being patient for the right setup. If you don't like that, you're probably not going to like this channel. That you're probably not going to like trading, I've got to tell you. It's not always go, 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 go. I've got to be in FOMO. When has that ever worked out for you? Most of the time, probably not. X-Snack says bullish next few weeks. All right, let's have a look at this poll. Oh, we're coming in 61% bullish. Guys, what happened to my bears last week? You were 70% bearish last week. What's happening here? 61% bullish. All right, we'll close the poll there. Oh, we got some bears. Good work, bears. Come on now. Get back in there, bears. Vote in. Jim Cramer, he rings the bell. I'm around 57th. I better go to the subway soon. Speaking of the Cramer watch, have we got any Cramer calls today here? Let's do the Cramer minute, the new Twitter segment where we quickly check Cramer for the day, make sure he hasn't done anything wild to us. Now, if you want to, you can come follow us at FX Evolution on Twitter. Let's just have a look if our good friend here, has he decided to do anything? What is this? Why is he retweeting people about how great he is? Okay, well, that's not what I want. What in the hell is this? Okay. Can anyone tell me what's going on? 1 minute he's got pictures of plants in his garden, zucchinis and tomatoes, and then the next minute he's in New York Stock Exchange. Now he's got an owl. I actually don't know what. I have no idea what's going on that. Okay, well, he's not helping us today, guys. He's got an owl. He's got pumpkins, zucchinis, and carrots and stuff. He's ringing the bell on opening today. Oh, wow. So, you know what that means, guys? Kangaroo market. Jim Cramer's not making, unless he goes over there and he's like, I'm bullish, guys. Well, how's he ringing the bell? Bullish, bearish, bullish, bearish, bullish, bullish, bearish. That's exactly correct. Jim Cramer is taking I like Cramer even better with the greens. Yeah, I don't know what all that was about. There was way too much randomness there. Anyway, now that we know Cramer's ringing the bell, expect the unexpected today, guys. That's what we have to do. But anyway, we'll go back. So the general thought process is pull back into the gaps. If it does pull back into the gaps, there could be potential here around these zones. I'm looking at like above that wick there, above the 3850s, ideally somewhere in here would be kind of the zone that I'd like. We are at resistance. We're also obviously opening above. That's the first one. Let's have a look at the second one here. We'll load up the Nasdaq. Nasdaq's going to be very similar. If we go to the NDX, you'll notice here, close just underneath 12,000. Current opening, 12,088. So if we consider it just underneath 12,000, this would be that kind of fill. That would be consistent with what we're discussing on, of course, the S&P as well. Fill the gap, come down, create the potential of the rally. You can see the wicks here. So somewhere around this 11,960. 11,960. Somewhere in there is where you want to see the turn if you're feeling bullish. If the market dumps through that zone, don't go chasing random bull zones. Wait for the turnaround story. If you're not waiting for the turnaround story, I'm telling you, it could go like this all the way into the secondary gap and then rally. You don't know just yet. What you're looking for is the turnaround. Once you see that manifest itself in price, you can pull your trigger. But you'll generally be much better if you're consistently waiting for these zones. So it's very similar here on the NAS as it is on the other ones. All right, let's go to some others here. We'll get rid of this double screen. But yeah, in both concepts, I quite like the pullback into the move up. Let's check some other things that make sense with that. First up, Dxy, US dollar. This is one of our lead kind of things. Well, it's not really a lead, but it's something we want to see happening with the market. If the US dollar drops, what's happening, guys? Let us know in the chat. Put it in. Ram here. Thank you very much, Ram. Always appreciate your support here. $20. Let's give him a clap. Thank you very much, Ram. Thanks, Tom. The private Discord group and private streams are amazing. Appreciate it, man. Thank you very much. That's good. Here is the DXY. So you guys are saying that it would mean bull time. That's pretty much correct. So the idea is that money flows out of USDs or out of dollar index in general and goes into risk assets. Remember, this is more than just the US at the moment. Basically, the US is the best hedge. Everyone wants US dollars. If you're from the US, you can be proud to say that you have the best dollar in the world right now. Pretty much always. You have the major. So everyone wants it. No one wants the yens. No one wants my country, the Aussie dollar. No one cares about the Aussie dollar. All they care about is USD, the euro. Forget about it. The pound, forget about it. We all know if we're in those countries, it's a bit sad. But yeah, USD is king right now. So if US dollar does go down a bit, it kind of shows you a potential risk on assets. Maybe that means money's going back into the DAX. DE40. Maybe that means money's going back into the FTSE. Maybe it's going back into the euro and it's floating around into riskier assets. It's stopped being hodled. They're not hodling it anymore in the US dollars and they're letting it run free. So we did break underneath this red box. And you'll notice I have two red boxes here. But the first red box has changed. Very important. Once that changed, we do expect a bit of a rally here on US dollar, which would be consistent with the pullback in the market. And then ideally, a move around. That is that it keeps dumping off. If the US dollar continues to fall and the stock market continues to go up, tick and a tick. Very good. So watch the US dollar. It's going to be very much appreciated that that is falling, and let's hope it does. Copper on the up. Good. Okay. We technically want Dr. Copper to come with us. First little movement here, definitely an important level. Would like to see it clear this 3.34. It's at resistance here into the open. I would still like to see copper start to rally. Again, my kind of idea would be boom, 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 rally up. That would be very nice. And it would be consistent with this little bull run here that we've got in the markets. Now, what we don't want to see, anyone that's been watching the streams for a while, do you know what we don't want to see? Well, we probably don't want to see the yields continue to rise. So let's do a quick yield watch. I'll just quickly load up here. Yields expected December 2022 to be at 3.475%. So 3.475 by December. Still very, very high. 2-year, as we can see here, so the US 2-year is currently sitting at 3.18. So it very much is expected that the market is going up right now. Yields are going up, and then eventually we expect them to turn, or at least the market expects them to turn later on in 2023. But this hike is still not good. So yields going up and stock market going up, not good. Tyler Wong, $5 Singapore. Thank you very much. Appreciate it. Love your content. How is the VIX looking this week? Well, thank you very much for the donation. And we'll go over to the VIX because it was our next one. So great timing, Tyler. Thank you very much. VIX, 25 points. So definitely on the low here. Now, we've seen it bounce off this before. Last date we saw 25 or around these lows was 8th of June. Now, we all know what happens after that. It went boom and the VIX went out of control. Volatility came back in, and unfortunately, it was pretty painful. So, yeah, we're back at that level. Now, let's just look at some of the dates because it's a great point, and we certainly should thank for the super chat because this is a good point here. Let's have a look at some of these dates. So 9th of February 22, we hit the low. We hit around 20. 9th of February, loaded up on S&P. You'll see where it is. It has a rally. It was rallying into that, and then it fell off. 29th of March to the 1st of April. We obviously know this one very well on the channel. We know what happens. It turned bad, okay? And then we could have another drop through. So if it drops through 24, 25, 24, at that point, we probably move down to 20. And I think that basically every single time it's fallen through, it's continued rally. So if we go over here, 2nd of Feb, we were rallying. Obviously, it dropped. It went to around here. This was after the 24th of Jan. So we got that nice rally up. Boom. So what I would love to see if I'm feeling bullish here for a little while is for the VIX to fall through 24. If it does, so far historically this year, every time it's fallen through, it's gone down to around that 20 level, and we've got a continuation of the bull. If we hit the 20, let's say we're hitting 4,200 on the S&P, you could make a pretty big case for being maybe counter to the market at that point, even though everyone will be convinced it's starting to go long. So it's a good one there. Moniette Crypto says the fact the 10Y is green is a massive red flag for me. Yeah, the 10-year is super green. It's also super inverted. So we've got 43% of all yields inverted right now from my last stat that I looked at. It's going to go 50. And never in the history that I have so far, which is 50 or something years of that history back, have we ever seen 50% of yield inversion and not got a US recession? But I already kind of think we're in one. And people, there is actually somebody that's out there that probably is watching that wants me to, they sent me an email. I'll check it out and put it in tomorrow's video if I like it. So thank you very much for sending that. But the word recession, guys, is overrated. And what I mean by that is it sounds scary. You're already seeing it manifest in price. Remember, a recession on average means 32% down in this SPY. Well, you've already seen 22%. So is another 10 that really that horrible? I mean, it's not great. Of course, I'm sure many of you don't want that. But what I'm saying is you've already kind of seen a lot of recession. That's the average. With FOMC in 11 days, I doubt very much yield will go down 100 basis points on the books. Yeah, certainly. FOMC coming up. If earnings are good, does the Fed care? No. The Fed only cares about one thing. They don't care about your jobs. They don't care about anything except for stopping inflation. They plainly said it in a statement the other day. They basically said, we will do whatever is needed to get rid of the inflation. And they still have the inflation at 2%. I don't know why they've got 2%. They should just leave inflation at 3% target and raise it. It's stupid. But anyway. Inflation 2% is kind of like a dumb level anyway. So, yeah, we've got inversion on yields. We've got all sorts of, we've got yields rising and the market rising at the same time. Not necessarily good. We've got US dollar going down. Definitely promotes this short-term bull run on the stock market, which is great. And when you go to the DXY, I just want to point out one other thing. Load up an indicator. Load up moving averages. You know, we haven't used them too much recently. I've noticed a lot of people have run away from them. That's okay. You can bring them back. Remember, my favorite indicator is actually the 20 moving average. We'll make it red because, oh, that's red because red things go fast. And if you load here and you go to a daily 20 moving average, look how far away we are from the 20. It's time for mean reversion. That's what we want to see. Let's go and have a look at the SPX. Obviously, we've gotten through the 20, but the weekly, guys, coming into tomorrow's video, the weekly. Why I believe this market can go up. We've forgotten about 20 moving average. We're back. There it is. 20 moving average was the god of the market picking drops throughout 2020 into 2021. Then it broke. Then it retested. Then it retested. What are we due for, guys? Check out where that level is. Let's zoom that in. Oh, yeah. 41, kind of 37. Breached it and then downed it on the weekly. So do we know that the S&P 500 loves the 20 moving average on the weekly? I would say it does. Respect after it broke. Respect. Well, I certainly wouldn't bet against it. So look for that one. You're seeing it live here, but it's coming back for tomorrow's video because if we do end up bullish today, or we end up bullish on the Tuesday session and we go for a little ramp here, I'm watching that. What do you guys think? Random Dude says, what are your thoughts on the 20 EMA versus the 50 EMA? I love both 20 EMA and 50 EMA. I prefer the 20 is the one, though. I just put a simple on here, but you would know I usually use exponential 20. So if you wanted to load the exponential on, which we should do, we can load them both together. Load 20 exponential. For anyone that doesn't know what an exponential moving average is it basically just puts more weight on the most recent prices. So obviously a 20 is 20 periods. That means it's 20 weeks worth of data. So the exponential moving average will be lower in this case because, of course, the market's been faster the short side. And if we got rid of the simple, so we'll just remove the simple, you'll see still very consistent with the levels. The simple is technically the better moving average when you're looking at the weekly. But when you're going daily and you're going to more precise, it's usually the exponential. So, but you'll notice that this one went over the 20 exponential. So if you prefer just to have one and not anything else, then I would usually go the simple moving average for the 20. Okay, that would be the one that I would usually use. It's just that mean reversion. Everybody uses it. It doesn't matter whether you're a big bank or anyone. They just always use this one on the charts. So it's good to have. Paul, thank you very much. Paul Scalia, $15. Appreciate it, man. Cheers, Tom. In honor of earnings week, can you check out Goldman Sachs? Maybe a double bottom recently. Love the channel. How's the cat? Lol. The cat's all good. For anyone that doesn't know, I think one day on the stream or something, my cat fell off the stairs and almost killed itself. So thank you very much, Paul, for remembering that. That was a bad day. But anyway, Goldman Sachs, we'll check it out. Thank you for the $15. So yeah, market S&P, weekly rejection, obviously a breach above that previous week, which we are currently coming into. Remember, the close technically was at 38.81. Nice close here daily above that 38.81. If we get a bullish close here today, I do think we have the run mat for pullbacks to be met by buy demand and potentially the 20 moving average. Somewhere up here. I would love that very much. Let's have a look at Goldman Sachs. I think that probably brings us close to doing that rundown on the market. It took us about half an hour to get there. We still need to go over gold. We still need to go over oil and Bitcoin. Yes, I know Bitcoin's going up as well, but we'll just do Goldman Sachs first. So let's check out Goldman Sachs here. The Goldman Sachs in the pre-market up 3.22%. Big, strong weekly candle off the before pre-earnings. We obviously saw all the other banks. Question is it a double bottom? What would a double bottom get us? Well, it's an island, I think. Let's have a look at a 2 hour. Yeah, that's an island. Small one. 1 hour. Okay, so it's an island. Similar to what we had previously, but that wasn't a full island. Look, islands are aggressive, but they often come back eventually. So what an island is, guys, is it's basically a gap down, consolidation, usually tight, a gap up, and then it runs. And if you can recognize an island, and I'm not saying I recognize Goldman Sachs because I haven't been looking at it close enough, it's actually a pretty aggressive trade and a pretty good trade. Usually it's one that doesn't come back. It usually kind of goes ballistic and then eventually just canes itself. So it does happen on stocks. Island trades are actually really cool. And yeah, I would suggest if you don't know the pattern, definitely consider it. So here's a double bottom that we're talking about. If that breaks, what happens? Well, the market would rally up and present a 338. Now, do I think that would happen? Well, let's just show you today where you're going to open, which is 303, is still underneath the trend line. So yeah, the trend line from this downward trajectory is going to be right at 308. I could see selling profit here. Like as in people trying to get out of the stock at around that 310, 309. Makes sense. You've got a downward trend line. I don't know why there's stupid lines here. Let me get rid of that. It's probably giving someone that has some kind of OCD freaking out. Anyone here got OCD? You probably freak out a bit on this stream with all the lines I draw. But yeah, basically we have here a low. We've got a small island reversal. We've got the potential of getting up to that 309, and it's a decent slingshot trade. So certainly the beginning of earnings here, allowing this slingshotting, this FOMOing effect coming in. But as we know, it's like that, buy the rumor or buy the fact, and then just they get bored afterwards. Why is the market so weak tendency into September? They get bored after earnings. The market's like, yeah, that was cool. Cool, nice. Let's get it down now. Everyone thinks it's all rich and all good. Remember, the first 2 weeks of July tend to be very good. The second 2 weeks of July still tend to be relatively okay. And then everything simmers out mid-August. Anyone have any thoughts on Barber? Certainly. When's the best time to get into next week's expected move? Is it Friday before the Monday? Yes. Well, yes and no. I mean, wearing the weekend risk can be too much for some people. Wearing the weekend risk. But a lot of the time, the market, it depends whether you want that first market open kind of YOLO, potential gap up. It all depends on how the Friday action was. If the Friday action was aggressive and it went bullish into the weekend, usually it bodes well for the next week, because it shows that people were prepared to take the risk into the weekend, including day traders. So kind of like follow some common sense there, I think, is a big one. Thanks for the Goldman Sachs question. It's a good one. Obviously, this bank looking pretty solid, and a nice little pre-market here, buoying the market. 308, 309, interesting resistances there. Let's scroll over to Bitcoin here before we get into the market. About 26 minutes away, so we'll take a look at the watch list here in just a moment of what's moving in the markets. But look, Bitcoin hitting the high, the 22,510. A breach of this probably takes out the previous supply and allows a real rally on Bitcoin to come through. Now, do I believe in the rally? Not sure I believe in the rally, but certainly a rally pushing through to 25 or even 28, 27, 28 would be possible. The explosion would be significant. This is going to be mostly down to the markets. If the markets go up, and of course the US dollar goes down, it will allow Bitcoin to recover. Nice recovery, still worried about the 23,000. I'd be very careful here with Bitcoin, but that's just my personal opinion. I do think it's an interesting one. $7.77 says Bank of America earnings out, already a wee bit of miss, but still spike in the pre-market. Go figure. Yep. Well, look, misses, again, the way that you look at it is a lot of people can't understand that a market goes up, stock comes out, has earnings, the earnings are really good, and the stock goes down. And they say, well, that doesn't make sense. Well, actually, it makes perfect sense. The stock bought the rumor and sold the fact. Where in the current market of everything is horrible, and then they just missed the expectation, the stock market's already got a very negative expectation. So then it's, oh, well, slightly better than we expected. Let's push it up. It's the counter. That's why a lot of people can't make sense of markets. Unless they knock it out of the ballpark, most of the time you want to look at the price action leading into the earnings. Thanks very much for the likes, guys. If you haven't already liked the video, enjoyed the content, please remember to do so. Let's check over the gold. Let's go to the golds. So gold still frankly horrendous. No one wants to buy it. And when I mean no one, retail wants to buy it, but no big players want to buy gold yet. I am twiddling my thumbs on this thing. I would like to buy gold. I don't know why, but I do love me some gold when it goes crazy. But I've always held to this truth. 95% of the time, gold sucks. 4% of the time, it's tradable. And 1% of the time, it's golden. Yeah. So when that happens, I really like it. I do think there'll be a switch here on gold soon. The sentiment's very negative, and I can see it. The flow is bad. Everything is bad. But if we could get some consolidation and we breach past this level here, which is around 1745, 1750, I could see pullbacks and longs here going into gold. So remember, this is a very heavy previous defended zone, what we call a defended zone. Has it broken through the trend line? Yes. Has it moved aggressively away from the 20 moving average? Yes. Is it super extended? Well, to know a super extension, look at the daily. Easily could get back up to the daily 20 at some point. But for me, I wouldn't mind I just want to see flow going back in. If you're feeling bullish on it, I don't think you have the signs just yet. You'd be mostly on a very small time frame for gold. If you're thinking it's turning right now, I would say more likely you want to see this, or maybe a little bit shorter pullback like that. Mohammed says, check out BTC/US 100. Bitcoin could outperform in the short term. As a raw percentage, I would say it will, Mohammed. So this is Bitcoin. So if we went BTC, I do like me some comparisons. So if we go up here and we click on this and then we slash US 100 or the triple Q, here it is. Obviously, Bitcoin's been underperforming as a ratio. A lot of the time it's been outperforming. The main reason why this happens is just risk on, risk off sentiment. So you've got to remember that Bitcoin's going to outperform if everyone's feeling the FOMO. I would say that you're probably correct and that there is a chance that Bitcoin outperforms the Nasdaq maybe up until around maybe 2.2 as a ratio, but it's still a very risky concept. Thanks very much to the 1,154 people joining us today. Appreciate that, guys. So we're coming into the market green. Let's have a look at some of the stocks. And we'll go over here to the market. And we'll check out US market. We'll go to the S&P 500. And let's have a look at the pre-market percentage change. Borg Warner. Excellent. BWA, 5.85%. It feels like the good times, guys. When you had those nice 3-4% days, check out Nvidia. Anyone notice what happened with Nvidia last week or a few weeks ago? Anyone see a certain somebody buying Nvidia sneakily? Anyone know who might have done that? A certain senator? Buying those sweet Nvidia positions. Not a small amount either. They were buying a lot. Pelosi was. That's right. 3.54%. Must be great. Must be great to have the inside. So Charles Schwab here up, which is good. Obviously, Boeing, 3.89. Nice to see Boeing. Forgot about the price, what Boeing was at, but still it's up. Goldman Sachs doing well at 3.8%. And in general, it looks like the kickoff to earnings season has been good so far. So the market is happy with the current earnings. Next week, we go into Apple, we go into Amazon, Microsoft, Google, the big heavy hitters. People are obviously going to be freaked out into that. Some people may be super bullish. I believe the sentiment's going to shift. 20 moving average on the weekly. That's the one we want to be looking at in the S&P. So pre-market here today, a lot of kind of big bull action coming in from the banks. While I could still see some weakness early, it looks like those banks based on Goldman Sachs, what we saw before, wants to go a little bit higher. It wants to go a little bit higher. Let's move over to US oil. Nice rebound here on oil. Big week, big daily kind of rejection. Let's go to the 1 hour chart. So 1 hour chart change trend here, pulled back. Actually not a bad long if that's what you wanted to do. Market could easily get back up to like a 104 kind of 50 here. Probably a lot of orders, bit of supply there. Might find weakness at this point. But yeah, US oil looks long for the session so far. Nice, strong kind of move. Good. $1.9 trillion in options expiration, and they still managed to get a perfect max pain. We don't know, Ruru. I just think it's funny that, that there was an insider trade or whatever you want to say like that. Pat says earnings is kind of crappy, really, but doesn't matter. Oh yeah, don't expect to be able to read the earnings and know what's going on, Pat. This could be a complete bull trap where the market just decides to go up. The strategies in the market right now are pretty simple, guys. There is the long-term approach, which is the investor. And the investor's looking at it saying, I was getting 22% plus cheaper discount, smiley face. Okay. Maybe they want to consider their position. Then there is the swing trader. Meh. You're dead, swing trader. Goodbye. Come back later. So the swing trader is not here right now. And then there are most of you at the moment, which are day trading, scalping, and being fast and nimble. This strategy works at the moment. The VIX is high. Very good. The long term works at the moment because you have a long-term approach. The poor swing trade is getting beaten up. And I say this all the time. If the VIX is above 20, consider whether you want to be swing trading. Because here's the problem. It's like this. I mean, do you want to really be involved in that as a swing trader? That looks confusing to me. You get the crap beaten out of you, and it's just not worth it. It is not worth it, guys. So if you wanted to wonder why you get owned at swing trading, it's because you don't adapt to the market. If the market is super aggressive on the VIX, swing often gets beaten down. You might disagree with me, but what does the chat think? What do you guys think? Abraham says, good looking TA. Absolutely. Thanks very much, Monica. Yeah, if you want to use max pain more efficiently, use the third week of every month, the big options expiration. It's just somewhere to help you get confidence. It's just funny how the market managed to pull a 386 out of nowhere. And that just so happened to be the perfect level to expire $1.9 trillion worth of options. I mean, I'm just saying. No conspiracy here. Peter Lang said the OCD triggered with that drawing. I'm glad you really enjoyed my high quality TA there, Peter. Nice Picasso, absolutely. He says, if only I could remember my own trading rules. I've got something for you to do there, man. Maybe we could print, we could write on the Word or open up the notepad if you don't have Word, and you could put rule number 1, rule number 2, rule number 3, and then print them off, get some laminate, and tick them each time you trade. Simple. I did that. True story. I laminated my trade plan and I would tick it with a big texter every time I was doing stuff. Massive texter. Woo! Yeah. And it stopped me from making poor decisions. You can swing fast and be nimble. Yeah, well, if you mean your stop loss gets hit a lot. Yep. The kangaroo market doesn't work there. Ulrich says, I agree a bit with you there, Tom. I only swing trade. It all depends where you get your entries. Yeah, look, what I'm saying is that if you're going to swing trade this market, that's tough, okay? It's tough to swing. You've got to have incredible discipline on your entries. It's not as easy as just when you're going in a bull market and you're looking for those turns, or when you're in a straight bear market and you're looking for those turns. The trips and traps in here are very difficult. A swing trader would want to go to currencies and trade currencies right now. That would be the play. There we go. Simple. Just make your rules, buy high, sell low, and you can forget it all day. Yeah. Can you please have a look at Disney? Yeah, I haven't looked at Disney in a while. So the story for anyone that's joining us today is S&P 500 currently at the trend line, currently gapping open 0.74% from the close. We could expect some shorting in the morning. If we do short, moving down, stick with us. We'll be going into the live here very, very soon. Let's check out Disney. I haven't looked at Disney. Frankly, I've been disappointed in Disney and their terrible new shows. Anyone enjoying the new shows they're putting out, or have they just been rubbish like I thought they were? Disney's got an island on it as well, very similar to the rest. So, yeah, no wonder explosive action. Nice little island. Basically, again, the gap below, little bit of consolidation, the rally through, hopefully a continuation. It's in what I would call the ability to start to talk about accumulation base. Basically, we've been here since the 14th of June. Hard to believe it's trading at 92 again. Wasn't that the pandemic low? Oh, it was a little bit lower, 78. Didn't stay there long. Yeah, this was that time where it stayed here. So this is 2015 prices for Disney. Really strong weekly candle. Very nice base look. Oh, if I was thinking about Wyckoff, that would be like a max pain. Obviously, 100 would be the breach you want. And then we move towards that kind of 112. Look, I could certainly see a rally happening here for the next couple of days on Disney, but it requires the rest of the market coming through it. Will you get that much outperformance in a stock like this? No. And that's the problem. Yeah, I agree. They do certainly like to add all of their stuff in there. Yeah, look, I don't know. I used to love Disney so much as a company. But now I've been left just loving Microsoft, which is a company I ironically hated for a long time. And now they're my favorite. So, yeah, I don't know. I lost faith in Disney once they actually round about here, I think, when they announced that they were going to make every single television show under the sun, and basically they were going to take Marvel and Star Wars and turn them into Western films. Remember the Westerns? Was it the 70s? Was that the time of the Westerns where every single film was a Western and every TV show was a Western? That's what they've done with Marvel. I have the Marvel fatigue. I haven't seen a Marvel film in a while. The last thing I saw, which is Top Gun, that was good. The rest, eh. And I like Marvel, but not anymore. It's become Westerns of the 70s for me. All right, so the other question was PLTR. I really haven't looked at that stock in a while. Where are you? Oh, $9, better than I expected. Thought it might be like $6 or something by now. All right, very difficult to analyze PLTR from TA. I mean, personally, I wouldn't do it. I would just look at PLTR from the perspective of if you believe in the fundamentals or something to do with that. It's just a stock that doesn't have much history, and it doesn't even have proof of being incredibly technical. Like, we have a lot of false breaks on it, e.g. here. You've got, yeah, we can draw this and say, okay, well, cool. We've got a base. We're finding base. Look, PLTR looks pretty okay. And the main reason is you've got a rejection here with a candle and a rejection here. So you're looking for a follow through, which you're getting in this morning's open. You're hoping it holds above here. And then obviously the rally would be back to that kind of 10 plus number. Do I like it from TA? Not really. My 14-year-old gave Top Gun 2 thumbs down. What? Well, luckily it was made for me. It was made for me and a few people in the audience. So that's all right. I'll take it and I'll give it 3 thumbs up. 10 fingers up. That's what we're giving it. Can you check crowd, please? Yeah, we can check that out. We've got about 8 minutes till the open here, guys. We'll go back over the S&P 500. Thank you to the 1,240 people joining us. Story of the week so far, banks reporting okay, earnings coming in mediocrity, but the market likes it. And yeah, most of these stocks seem to be coming off like nice little islands. We checked out Goldman Sachs before. That was doing pretty good. Even Disney looked all right on the chart. Crowd holding a very nice kind of trend line here. You can see that trend line just holding up for Crowd. Nice little trend line. Got the top end as well for it. So that's a good thing. Kind of got that top. Well, yeah, this is more curve fitting, but certainly I do think it's floating up on a nice kind of action. And yeah, decent strength here. Let's have a look at the 2 hour. It's up 1.63 in the morning. Yep, nice little breach, decent candles. I mean, overall looks okay. Looks kind of consistent with the market towards the bull side. Target would obviously be in that 190 kind of 3 zone, maybe even a little bit higher. Yeah. Googly split. 112 now. Is that right? 114. So Google split is through, guys. Never thought I'd see the day. Kind of confusing now. It's only $112. Once was $2,254. Now looks cheaper than it really is. Didn't ramp as much as I thought it would. I thought it would get, well, I thought it would get here, but maybe even a little higher, maybe 2.5. So Google was from top to bottom, or top to this price, 25.89% down, and was 32% down. That was a great zone. Anyone that got that, congrats. That was very cool. Just picking that order block up, very nice. Apple's been a beast. Yeah, Apple's done better than I thought. But, you know, I'm a convert again. I bought that MacBook Pro thing. It's really nice, guys. I like it a lot. And I was considering Windows PC just so that if I travel, I can still make videos for all of you. And I wanted a PC. I did. But then I got seduced by the Apple build quality. It was so good. I was like, yes, I still love this Apple. It's bloody heavy too. But desktop PCs all the way, guys. Desktop PCs, Windows PCs. Microsoft, support the stock, yeah? All right, here we go. 5 minutes till we get in. 3893. We're at the resistance. Let's talk the game plan again for anyone that missed it. For anyone that's been watching the whole time, well, we'll unfortunately need to go through this again, but it's important. So currently, market is sitting on the trend line down. Here's the trend line, so you can see. General thought process is that probably the market will go towards a weekly 20 moving average because it hasn't been reverted. Main reason why. It loves the 20 moving average. Proof is in the pudding. Use the 20 maybe simple moving average if you want to. That would push us into a gap fill on some gaps. So let's go back down to the, let's say, 4-hour chart here just for a second. So we have a gap that still hasn't filled on 4,019. I think there's some gap in here as well. Somewhere in there, there's one that's been left, a miniature one. So the market could certainly move down from 3,900, fill the gap early in the session, potentially look for a turnaround. If you're feeling bullish still, that would be an interesting point for a turnaround. And the main reason why, we'll use the 15-minute chart for this, is when we have a look. When we have a look at the orders over here. So here's where the market closes the gap. Previous resistances and a bunch of orders. Bit of a distribution. If we pull that across, that would be an idea or a zone for it to pull back down to. Now, I don't know if it's going to. It could just keep ramping and ramping and ramping and ramping. And just know this. In some ways, if it leaves this gap and it keeps going up, and let's say you say, oh, I missed it. when you're coming up here to, let's say, the 20 moving average and we get all the way, and then you see turnaround scenarios, well, guess where you're going? We've got 1, 2, 3 unfilled gaps at that point. Very highly likely we get down there. But at this stage, it looks like the rally is set to happen. And I hope it does. I mean, we've got banks coming out. Everyone's feeling good. It's fantastic. Everything's fantastic, guys. Netflix coming out tomorrow. Tesla. Tom, your watermark is off, is it? Oh, yeah. There you go. Thank you very much. Appreciate that, Ranger A. So Goldman up, market's loving life. If you're long, cool. Otherwise, you are at resistance into the open. Another thing that could happen is it rallies first, hits a new peak, comes down, busts this low it's just made here, moves down. If you wanted to have a full shoestring, that would be the concept. Roku coming too. Is that still a stock? 2 minutes till open, guys. 2 gaps left. 1 maybe filled at resistance into the open. I didn't even know Roku was a stock. I thought it was dead. $88. Okay. For anyone that doesn't know my illustrious history with Roku, I've hated 3 big stocks. Well, actually, I hate every SPAC as well. But I dislike Roku, I dislike Zoom, and the other thing. I can't remember what it was. But yeah, I cut sick on this thing when it was up here. I did not like its price. I still don't understand this company and why it's worth anything. Also, Piton. Where's Piton? Is that like $10 yet? Oh, it's worse. Huh. Wow. Okay, we open, guys. 38.95 on the open. Sorry, I was a bit dumbfounded. I didn't know Piton was $8.70. The Ab Cruncher 3000 turned out to be the Ab Cruncher 3000. Do not buy home fitness is the word of cautionary tale. Like all television station programs that come on at 1 a.m. in the morning when they sell you ab crunches and disco bikes and whatever else, something that's going to instantly make you lose all of your weight, they never work out, hey? It's human nature. Oh, that's bad. God, help me. That was bad. Piton. The Roku product is legit. Yeah, I know. The price wasn't legit. Oh, Tom, you love space? Hate space. It's bad. Bad stock. Teladoc. Well, Teladoc, I was kind of behind. I must admit. Remember at 190, I kind of liked it. And then I read the report. And then I hated it for the rest of the time. Yeah. But yeah, no, there was a little period of love with T-Doc. That kind of changed. Piton is a YouTube pump stock. Yeah. Yep. It was certainly a pump stock. DocuSign is terrible as well. I haven't actually looked at Docu. So market is open here, 3893. Basically, we opened pretty similar to where we had it. Interesting, the NAS has taken the slightly bigger dive here in the pre. Big moves in terms of just percentages. NAS instantly shorts more and then longs back up. So pre-market, people like it. Into the market, people like it. Let's go to the biggest movers and we will look here at percentage change. So of the S&P 500, Delta Airlines, number 1. Wow. Carnival, number 2. Travel, Boeing. Travel. Banks, all the good banks, 4.26% for the GS. The Goldman Sachs, nice strength there. Could potentially get to, where was Goldman Sachs? What price was it at? 306. So we had that 309 on it before, 308 in terms of the technical resistance. Caesars Entertainment. So it looks like a bunch of travel stocks in general improving here. Wells Fargo, my goodness, it's coming back up. I still can't believe that thing's 42 still. I remember it was like $20. Pretty strong across the board. Under Armour. Let's have a look at the sectors for anyone that's interested. This stream is not sponsored by Tiger Brokers, but I do certainly suggest them. You can look at the stream's links description down below. And one of the reasons I like them so much is because we can get some sweet market overviews. So we can click on the US market. We can look at sectors. We can go percentage, do today. And you will notice that oil is doing very well. So we'll just quickly refresh this. So oil seems to be doing pretty well. Diversified banks are doing pretty well. Semi is not too bad. And the general kind of gist, of course, defensives down. The soft drinks and the electrical utilities go to 5-day. Electrical utilities actually been flat here for a few days. And you can see the switches seem to happen into technology hardware recently. And semiconductor equipment and semiconductors. When Pelosi bought them, they all went up. Semiconductors 10-day now, 9.54%. So that's been the strong sector here. And most of the defensives underneath kind of just lackluster. So the overall percentage change on the sectors has been fairly consistent actually for quite a few sessions now. Nice moves. Nice. I bought BA and Barber. I wonder which one is going to do best, says Young Buck. That's a great question. Barber got thrashed again, didn't it? I haven't looked too much. Yeah, so he got thrashed again. You brought that into an investigation, didn't you? In this investigation? Let's have a look at the Barber on the daily. Looks like the worst is probably over for this stock. And I think that about the whole QQQ. If you're looking at the Chinese stocks in general, I've got a big box on them. You can see I've got my resistance box, got my support box, and my nothingness. Just feel like this is big accumulation. Volume is still relatively okay. Huge accumulation. And I do believe there's going to be some stim packs injected into this economy soon. So expect big things, I believe, in the next couple of months out of China. I would doubt very much that they don't inject into their economy a lot of money. Yep, that's right. The Pelosi injectors. I like that one. Yep. So markets start green here. I guess it's a bit of respite. Do be concerned and a little bit, weirded out, though, if we keep rallying. If this turns into something like a March position where we go up vertically for a few days, so we go boom, 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 like a really nice strong hold. Remember, these are symptomatic of bearish markets. And in fact, in all great bear markets, you usually have a day that does over 7% in one day. Now, that generally happens off capitulation, but you've got to expect the unexpected. Practice risk management at these times, guys. If we breach here, the most likely scenario is that at least we come back up to, I believe, the 20 moving average weekly. And if you want to see where the weekly is, we can go over there right now. And this is the, looks like the standard moving average. So basically that would push us to around 41.10, which would be pretty consistent with the current setup we've got here. If we go over to see that weekly setup, look at this. Down, down, 3 rejection wicks off our defended zone. 1 gets liquidity, then starts to boom. Over here, we had, need to use SPX. Over here, we had not the same type of setup, but certainly a lot of wicks and then some serious injection of nice bullish days. Big 4 bullish days after each other. 1, 2, 3, 4. 1, 2, 3, 4. And at the moment, if we go over to our current price, we're on 1, 2, 3. Well, will we get a 4th? DXY is still getting destroyed. Yep, that's good. For bulls in the market, that's good. US dollar weakening is good. Down to the 20 would be consistent. Back to mean reversion. Back to mean reversion on the other market. If you want to put the DXY on a pedestal of how insane it's really gotten, check out this weekly 20. We can stay away from a while, but it's pretty far away now. Everyone became obsessed with the US dollar over the last 2 weeks, which usually means it's in excess phase. See the resistance? Even that's back in 2002. DAX is relatively weak, probably shows the underlying of the market is really pushing into technology again. Apple weak as well, actually. Maybe tech, maybe hypers, sectors that the DAX doesn't have. If we scroll through here, I can see that ARC's up about 3, hypers are up about 4 in general, like the shops and everything else. I forgot shop had a split. Yeah, $33 now for shop. Just holding for quite some time. Metals doing okay. So that means the FTSE and possibly ASX 200 will be doing all right as well. Check out this iron ore. I know most of you probably don't care about iron ore, but I'm Australian, so I'll show you it. Have a look at iron ore. So we've dropped back to where we were November 21, or very close to. That just shows you how much of a bubble construction iron ore got into, and it also shows you China's demand weakening here. So yeah, that was some unsustained. The VIX is up today. Yep, VIX can go up when look, we see VIX as a fear indicator, but VIX can still go up even though the market goes up. VIX is still volatility. So if the market's going up with aggression, then the VIX can still go up even with the market going up. It's just rarer to happen. Generally speaking, the VIX is fear. Remember, it's based on options price. No worries, Aussie. Thank you very much for joining as per usual. What currency would be due for a relief rally? The euro would be the one. It's been the most prominent in the markets. Let me just get some stats here for you guys. Quickly get rid of that. Let me load some stats here up, and I'll tell you whether IFX. Okay. Yeah, so this is consistent. Euro longs now from retail, only 61% of people are long. So that's down from 85% of retail traders were long last week. Now only 61% of retail traders are long and 39% are short. So we're starting to get into the muddy ground where it allows the euro to rally back up. Yen, still 76% of retail traders are short. So again, that allows euro to probably get a bit of a rally and maybe come back to the 20 moving average. US dollar yen. One. Go over here, US dollar yen, 138. So still moving up here, yen devaluing as the US dollar pressures against it. This is a separate issue. This is obviously all about, as we know, the Japanese basically printing their money out of control to stop inflation. Very, very, very risky. Probably ends bad. I've heard the cut is somewhere around 142. We'll find out. Somewhere in here is the cut. That's pretty much, young buck. Did Goldman Sachs already hit the level? Oh, nice. Wow, that did crazy number coming in. Damn. Where are we with oil, Tom? Seems filling out an inverse head and shoulders, but approaching a downward trend line. Yeah, I agree with that. Oil up, then down, which is what it's doing. So you're saying basically you've got like a trend line down here. Don't fight the trend line though if it does breach through. So that's your trend line. Nicely figured out. If it does breach though, that would be my expectation. These trend line breaches can be actually quite significant. I still think oil does reduce. But notice this, we have a market going up here. We have yields going up. US 10 to, this is not good. Remember, this is reminiscent of what happened last time. US 2-year and 10-year went up. The market went up. The dollar went down, which is consistent with the bullish market movement. And then we got punished because the yields kept going up. Hurricane season starts soon. Jap rate decision this week. Oh, well, there you go. Good call on the trend line though. Be interesting to see how it interacts with this over the next 24 hours. Can you do an analysis on the bounce off the low number on the SPY, please? I'm not sure what that means, Peter. What number are you saying? Yeah, I saw that he won the British Open. The golf. That guy eats like pies and drinks beer, and then I don't even think he's that fit. It was like hugely unfit. And then he said he went on a 3-month detox. Everyone else is working their ass off all day, and he goes on a 3-month detox and then eats a pie and then wins. It's pretty good. It's awesome for him. Thanks very much, Monica. Appreciate that. Yeah, I'm not too sure what Peter meant before in terms of the bounce off, but my general... I'm not too sure what he meant. If you meant the bounce down here or whatever. But look, in general, this has been okay. I mean, our zone here held up, which was what we wanted. We broke through the 3880, which theoretically is looking bullish. It looks like we want to take the trend line out for now. And if we do leave the gaps behind, which are here and here, and we keep rallying up, there's a very high chance that means it's a bull trap. And I think this is an evolving situation. Obviously, you're in here for being fast and nimble. And if you're holding positions, good work. I'm looking for that 20 moving average on the weekly. I'd love to see it. I'd love to see it. Oh, Peter says, what is the low you see the SPY going to before it bounces and continues higher? So I think it bounced. I still kind of feel like we can get this rally in for now, if that's what you're asking. If we go back over to the weekly, unless something drastically changes, the general rule would be we'll just change this to a 200. I'd be very surprised if we don't touch that 200. So most of the time, 200 weekly is touched in pretty much most pullbacks. So I'd be surprised we don't get it again. 200 over here, 200, 200, 200, obviously went through 200. So I would like a 3,500 or 3,200. They would be consistent. And I think 3,200 is consistent around 32% down, which if we do enter a recession is pretty much where the market goes to. 32% would be the average recession pullback. If we break all-time highs at some point, what's your next target? 5150. Wow, that's a big... I don't know. Haven't thought that far. You're playing 7D chess while I'm playing 3D chess with everybody else here. Maybe even we go in the 4th D. We're not 7D yet. Look, I haven't even considered an all-time high here for the markets yet. I'll play with that when it happens. But I do think that if we get out of this recession, we get out of the inflation, more importantly, because that's really the question here, not so much structural integrity of the market. But my general concept has been consistent. I do feel like we have a rally, and be expected that once we come out of whatever this is, I think they'll go lax lending. So what I mean by that is they will make it easier for people to borrow over the next coming years to try to support artificial growth. And that's when you got to be worried. Be scared if they make lending easier. Rules for life. Rules for life. Nvidia rocketing. Well, I wish I bought 20,000 units of Nvidia, guys. 5.89%. Very strong movement here. Big gap left. Wow, it just reminds me so much of the rallies we saw in March. Bit of a face rip rally. Let's see if we can get it. Third day so far. Can we get a fourth day? We went back to look at some of those other face rips. 1, 2, 3, 4. Actually, it was kind of 5, 6. 1, 2, 3, 4. 1, 2, 3, 4-ish. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2. Okay, so these were only threes. So 3s and 4s. Big rallies of 3s and 4s. 100% hiking into recession has never ended well, so I don't see why this time is different. Yeah, pretty much. Pelosi's playing 7D chess, 9D chess. And the Fed will be forced to stimulate the economy? Yeah, probably will be. In the future, that is. Hi, Tom. Do you still use monthly pivots on the SPX? If we do go bullish, the R1 could be plausible this month? Yeah, of course. I'll probably bring pivots back into our discussion. Maybe even tomorrow's video. Or today's end of day video for you guys when I wake up. Pelosi is the new Kathy Wood. Well, she's smashing it. Her returns are exceptional. Cool. All right, guys. Well, thanks so much for joining us today. It's been a good session. Hopefully you enjoyed it. If you did, make sure to subscribe, smash the like button. Always great to have everyone here. Thank you for the donations. Thanks for the likes, the support. And we're getting close in on 100,000, and I really am very appreciative of that. I'll give you a quick live read. 98,343. So that's amazing. And yeah, I can't wait to hit it just because it's a bit of a lifelong goal. So that'll be awesome. But remember, stay patient, react, don't predict in these markets. We'll continue to cover the earnings story as it plays out. It seems for now, mediocrity earnings are good earnings. Good earnings are good earnings. And bad earnings probably are good earnings. So let's see if we can get ourselves a nice 20 moving average over the next coming week or days into maybe next week. Be careful out there, though, guys. The great thing about markets and the bad thing at the same time is it's very easy to flick the switch and to prove that, everything's all great or everything's all bad. And then all of a sudden it switches. If you want proof of that, think last week. 70% of the wider community voted bear. I don't blame them, by the way. 30% voted bulls. That's a big stat difference. Other surveys were coming in showing us that only 24% of people were bullish. So theoretically, our community is smarter. So when everyone's bearish, sometimes it pays to be bullish and vice versa. Just consider that. We always bring in the human psychology into these things. Catch up. Good luck. Wait. I need to finish here with Goldman Sachs. Oh, well, there you go. Sneaky Goldman Sachs. Well, for anyone that was looking at the 309, well done. Otherwise, it's lost a little bit of that action. But yeah, very nice. Good trades, guys. Bye for now. Ciao.